Okay, so I'm going to start. Last time we just did the market makers buy model. So
Yeah.
today we are going to do market makers. Today we shall
Cell
do
model.
market maker sell model. Today we shall do the market maker sell model
Model.
SM. Market makers sell model. They call it in bracket. It is MMSM. So for a market makers model, we need to have the requirements I told you. Oh, I think my network had some issue.
Yeah.
So I was saying we had market makers model, sell model, buy model. Then this week we are having market maker sell model. So it is the same requirement. We need to start with a sweep of liquidity or a rate of liquidity. Then from there, we need to have a market structured shift or change in character chart. Then we need to have an entry level for the distribution. So a market maker sell model is like this. When you are selling, we need to start with the buying side. You have got it. So price will start from here. This is the original consolidation, which is the terminus. Here. You see this?
Yeah.
This is distribution 1. Distribution 2, we call it reaccumulation 2. Because price first reaccumulates, then distributes. Then it comes here and sweeps so that we have a sell program activation. Then does a change in structure here. Then comes back into a fair value gap or a mitigation block. Then we do distribution 1. This is a low risk sell here. Then we complete the move. So the move will be complete when we have cleared this terminus here. You have got it. This original consolidation should be cleared. So up here, this is where the move started from. So whenever I ask where is the move coming from, you need to see where is the sell program or buy program activation. That is where the move started from. If you don't see it, don't trade. So the move started from up there where we have an array. So this one, it created a sell program activation here. So this is where the move started from. The moment you hear me say where is the market starting from, where is it coming from, you just know you're looking for the 3 elements: array, a sell program activation, and a chart. So if you don't see them, it shows you don't know where price is coming from. You have got it? So where do you enter?
Yeah.
You enter from a fair value gap, which will be somewhere there. Or it can be an FVG or a mitigation block here or order block. Then our low risk entry is always here. This inverse fair value gap, sell. You have got it? So a mitigation block here, sell. Those are the low risk entry that we have. They are the best entries. This is a high risk sell. This is a low risk sell, low risk sell. So we prefer entering on a low risk sell. Then the price will complete the move by coming to the terminus, which is the original consolidation of that entire move. We call it the terminus, like the end point where the price will be complete. So this is the algorithm of the market. Now, when you're trading, you don't need to trade from here. We just need a small move. This one enough, or here enough. We don't need the entire thing from here. You just need this one here, then also here, down. It is enough. So is a market maker sell model. We shall have the curve, which is like this. So our focus will be sell side. We don't need to look at buy side. We shall only look at the sell side of this market. The sell side curve. We don't need to see anything on the buy side. The buy side, we only want the mitigation block and inverse fair value. Those are the only things that we want in the buy side of the curve. So this is a clear market maker sell model. So our low risk entry is from this mitigation block. Or you can also have, so this is the mitigation block. Then this is the inverse fair value gap. They may not be in that order, it depends, but here I've marked because of how I wanted it to be. So this is where we have low risk sell. Here is high risk, easy to lose here than here. So you see this is an example of a market maker sell model. I don't know whether you were here when you had already joined the Zoom, which I always have. Actually, it is this year that I've done Zoom. I always don't do it. So this is where we have a market maker sell model. So where is price coming from? It is here because it swept that high. Are you seeing? Then where is the red? Are you seeing this is the red? Where is the sell program? Are you seeing? This is a sell program. Then where is the one? We may wait for this one as a chart. That one there. So that is our chart. Now this has happened in monthly. So you tell me, why would you go and trade other pairs? My guy, like you have seen this one. This is a sell program. Why do you want to go and trade other pairs? Every week you can trade this one. Then price comes back into this fair value gap for entry. Are you seeing that someone is holding this price from 20? From last year is still holding around October. This price came in October 25th. So you're holding a sell. Your first take profit must be here. You see this law? We shall read. This is our first take profit. This pair was very easy. When I share it in the group, people think like maybe this guy, he has done something, he has, but because of this, I am easy to know. You have got it. Now we don't enter from here. Now this is a low risk sell. Here is another low risk sell. Because this side we have this fair value gap here. You're getting it. So we just wait for price to go, come back, then we enter. So we have low risk sell here, low risk sell here. Here it will accumulate, then distribute. It's very easy. My guy. So where is our original consolidation of terminus is here? This is where price is coming to. You've got this is where price is coming to. Price is coming here, price is coming here. So those are the things you need to know. Where is it coming from? It has to have this. About that, so just need to know. I was showing you when I ask you where is price coming from, you need to know. Is it a sell program? Is it a buy program on higher time frame? When I talk of higher time frame, it is monthly, weekly, daily. The other thing in H4 hour 1, it is relevant. If you know the bias of higher time frame, you just need to relax. Just wait. You see this one, the whole of this month. This is January. It is just dropped. You have got it. And an entry came with this mitigation block here. You see this? This was another market maker sell model. Are you seeing here? This is a raid. Yeah. This is the same thing. This is a sell program array. Inside an FVG, a sell program activation, which is here. Then a change in market structure, which is here. You see this? Here. So the kind of December closed below this level here. So we are having a church. So where was our entry? Price just came back inside this order block here. It tapped it, then dropped. So how do I know this setup? I go to daily like this. You're going to see. I see this setup in daily. This is my daily time frame, like this. So this was the church here, this one. This is the church. Let me remove this. So you just adjust. This is the array here. Then this is the sell program activation. This is the thing. Price came back inside this fair value gap. I said it tapped. When it tapped again, it created the same element. Are you seeing this array here? This is the array. The same thing. This is the array. Then this is a sell program activation with a church here. So we entered this one. I sent it last week, I think. This is the church. Then we sell. So where is the terminus? This is the terminus. Yeah. So this is still a market maker sell model. So we make our entry. I see. We make our entry.
Yeah.
This is the terminus here. So price comes back. We made our entry in this candle. Our take profit was here. You're getting it. Now, this market moved. It sold for 1, 2, 3, 4, 5 days to reach this take profit. You have got it.
Yeah.
Then the same thing happened
Yes.
here. The same move. Are you seeing this move? This move. Price. This was the terminus. You see this? This was our terminus in daily. So we created a sell program activation, a small church, which is this one. Then price came back and we dropped down. I even shared this one in the second week of January. Then it dropped down. So this was the terminus, this one. That's when price reached, it shows the move is complete. When it reaches the terminus, it shows everything is complete. So we reached our terminus, it was complete. Then again, we reached the terminus, it's complete. So the next move, we want it again to trade back. The same thing. This one, we wanted to create original consolidation here. Then we want to trade back inside. Then again to drop. I think the same thing. This is the same move. This is the same move. This is the same move, which will happen. You just need to get the higher time frame key level, then you trade it, which is this kind of structure. Accumulation here. When you are selling, we start with our buy. We do distribution 1, distribution 2. Then price comes and sweeps liquidity inside FVG, then drill a chop, entry, fair value gap, drop, entry, inverse fair value gap, drop, entry, a mitigation block, drop. I was still showing you.
Yes.
How it happened. So
Hello.
this is a market maker sell model. We are
Model.
having our original consolidation here. Then price comes inside this fair value gap with a rail here. I think this one is a fair value of a mitigation block. It must first tap it. You see, it tapped. Without tapping, there is nothing. Then we started now selling. You have got it. So our low risk entry is, there was this fair value gap, that was a low risk entry. Then there was this mitigation block, that was a low risk entry. Which is happening here. See, this is the low risk. Another one come back, low risk, the same thing. So this is how it happens. When you go to R1, the same thing, even H4. I see the same thing.
Yeah.
H4. You see in H4, this is our original consolidation. The same pair. You see in distribution 1, accumulation 2. Then here it does a church, a cell program activation here. Then array is here. Then we come back. I think the entries now. You see, this is a mitigation block, fail order block. I think our price pass through, came back, dropped. That was entry 1. Then our entry 2. You see this 2 line? This is a fair value gap, inverse fair value gap. This candle low and this candle high. When I adjust it like this, that is inverse fair value gap. Or you can even use this one alone. You see this low and this high, it creates a fair value gap like this. So price came back, gap, then it dropped. Until we reach here, it shows the move is finished. And that's how we trade a market maker model. You have got the same thing when you look at it. We have the curve. So we are concentrating on the sell side curve, which is this side. This is the sell side curve. That is where we are focusing on mainly now. So we just wait. We don't trade here. We wait here. Comes back, enter. Comes back, enter. You need only one setup like this a week. So when I talk of one setup, I mean I want this one first form. Then I trade this one the following day. It is done.
Yeah.
It is very, let me show you an example. You see this pair?
Yeah.
You see this GBP chef, the one I posted, we are talking about yesterday. I want to show you GBP chef, this one. You see this pair I shared yesterday, a sell. I think this is a clean market maker sell model. This one. It was very clean yesterday. You see, it came back. This is now our terminus. The only thing when I posting, but there are certain things I don't post. You're getting it.
Yes, definitely.
There's no need for me to post all this explaining. I just post, but there are people whom I've trained, they know, they understand. So you see, original consolidation. Now price should come back and clear here. So it went here. This was yesterday was Thursday. This move was Wednesday. You're getting it. Then it created a range.
Yeah.
Then Thursday, yesterday, we traded the sell. That's how you trade. This is a market maker sell model.
Model.
A market maker sell.
Yes.
This is the terminus. This is where price is.
So this weekly high is this week's high.
The terminus or original consolidation.
Yes. So the weekly high is this week's high.
True. This is one of the advanced way to analyze the market. It is too advanced. You become confident. You just need to wait and relax. You give almost, your setup will be always correct. And this one, you don't need to trade one pair. You just look for pairs and you figure out. So, you see our entry was here. This was a fair value gap. That one. Now, I cannot start naming them, FVG, those things. I only want this chart, rate, then sell program. Then we drop. I think this was like the same example I was talking about.
Yeah.
You have sent here. Hey, okay. So this is.
I don't think you can hear me.
So let me share you the screenshot. Why is it not pressed?
Yes, I can hear you now. Hello.
This was the setup I shared during Zoom.
Yeah.
Sorry, I talked about it during Zoom, but I already shared it in the group. I don't know why it is not pressed in here. So this is how these are the best setups to trade. You wait, you've got it. You wait for them to
Yeah.
form. You don't be in a hurry. The same thing, like if you look at this card. No, I'm not hearing you. I cannot hear you. I cannot hear you. So if you look at the pair of card, JPY, those JPY pairs, this one. Hmm? These were so basic setups. This one. They were very basic setups yesterday that I shared. Very basic. Let me explain it to you. You see this pair? You recall in the group, I was saying in the Zoom, I could say we need this pair to give us a buy or a sell program. We remember we don't trade without. So this pair formulated a sell program here. On Wednesday, you're getting it. This was a sell program which showed. Remember, we don't trade here. You have got it. Our trade is here. You see this? This is our trade. That's what we trade. We trade a mitigation block. This is the mitigation block. You can call me on my phone, then we talk on WhatsApp. I'm not hearing you. So this is the mitigation block here. So this is what we trade. Now, this was yesterday. This formed on Tuesday, the buy program. This was the ray. Yeah. Hello? Yes, I'm getting you now. So this was the raid, which formed on Monday, Tuesday, and Wednesday. Oh, we don't need to force this thing. We just need to wait for them to form. If they form, then now we enter. So this thing formed on Wednesday, but it took 2 days to form. Monday, Tuesday, then formed on Wednesday. Then the first trade of it was on Thursday yesterday. So this was the buy program activation here. Now we trade this short. Now when price comes back, we trade this mitigation block. When price comes inside mitigation block, just look for a red here. You see this? This was the red. It happened in New York. So when this red happened yesterday, now this setup was ready. It was very good for us to buy. You have got now there are certain things I cannot just explain all the time in the group because not everyone understands. There are few people who may understand. So when it does a red here, like this in New York, always trade New York. You will make more money in New York. So price trades, then it gave us an entry inside this immediate imbalance here. I see how price just came and tapped, then went up. So this was a good one. Then today, you come back into left hand side there, you look for an order mitigation block or a breaker block. So you're seeing this one. This is the mitigation block here. See that? So we wait for anything to happen here, a raid. In New York, I see this same zone I've marked it, the fair value gap. So we are waiting for a raid to happen. Here, then we look for a buy. So we just chill. This is a very good, this is a market makers buy model. But you have seen how it is organized. Yes, you just trade this one. They will take days to form, but when they form, you just need one trade. You need only one trade. Just one, you don't need very many. You need only one trade to say amen. I don't know why this thing is not working. I'm trying to paste it. I've come here and copied. You see here? Copy image. Copy. Then here, paste. I don't know why it's not paste. But I will send you. So I just want you to see this. I download it. So man, yesterday you just made people join the group. Do you know that very many people joined yesterday? You have very many people. Do you know? Do you know that group was there since 2020, 2023? Yes, but that I don't do it in those things of marketing. Those one who get chance, they get their chance. So, this is the pair. So you wanted this one, eh? Does not download the W. This one here does not come. Oh, let me first reset this WhatsApp again. But you're picking it, eh? Yes, you will share your screen. It has worked now. You'll share your screen, then you analyze. Now, I see those two. I think this is a market makers buy model, and this is a market maker sell model. But they may not be like how I've drawn, but you need to have the picture in your mind. Yes, the background picture in your mind, you need to know that. You see, like this one, this was a sell model, but it is a very small one. Eh? This one, it came, swept away, then dropped. Then the same thing happened here. So you're going to share me your screen. I think I've enabled you. Who shares all participants? You can share all. So you can share your allow. Yes. It's coming. Okay. Okay. Yes. Yes. Okay. Now, I want to look for now a key level. That church is okay, but the first church is this downer one. Yes. That was the. You see how we had a low risky buy after that church. Yes. So you see how we had that low risky buy, that fair value gap. It just bought. So you go to daily. Mm. Mhm. Now I want you to do this. You go back to the first chart. Yes. You always don't open many chart. Now this same chart, just go to daily. Yes. Like that. Now you squeeze it small. Squeeze it like that. Squeeze, squeeze. So that is enough. You have got it. Now, what do you need to do? You add just on the church in there to make it very clean. I'm going to teach you multiple time frame analysis. Uh-huh. Yes, you add just. I see the low risky buy came there in that fair value gap. After the church price came back, yes, that gap. If you mark on your left hand side, you see there's a gap which is inverse fair value gap, then you drag it. Hey,